we take care of about 1,000 businesses right now. So I have to carry my cell phone with me on New Year's Eve because invariably I'll get a half a dozen phone calls from panic clients. Hey, I'm at the dealer. Now, what was that gross vehicle weight? So, another great idea to help save you taxes. How many of you here have what's called a health savings account? A whole lot of you. Good, good. If you don't, and you have a high deductible plan, the only requirement to do an HSA is to have a high deductible plan. And here's the deal on high deductible. Everybody in the world, it seems like, has high deductible now because insurance is so expensive. If you have an HSA, what you can do is you can put, as a family, $6,750 max or anything below that into an HSA account. Now, how does it work? My wife and I have an HSA, and they give us each a credit card. And so if I go to the doctor or go to get a prescription filled, I simply give them my credit card. They take the money right out of that HSA account. And so we're now paying for those medical expenses with pre-tax dollars. Because this whole amount is tax deductible on your return. As a sole proprietor, as an S-Corp, as an LLC, it doesn't matter. So if you have a high deductible plan and you have a lot of medical expenses, an HSA is a no-brainer for you. Okay? If you don't understand it, call me and I'll explain it again, but they're a really neat thing. Yeah?
This is only good, like my husband gets to the school district.
Uh-huh.
So this is only if he doesn't work anymore.
So he's doing an HSA through the school district?
We have
You can only have one per family.
right.
Yeah.
So all the stuff doesn't, somebody has healthcare.
If you're already doing an HSA, FSA, the problem with those is the use it or lose it clause, where you have to determine up the front of the year how much you're going to put in, and if you don't use it all, you lose it. With an HSA, if you don't use it all, it carries over forever. And so that's the nice thing about these. So you might want, well, it's up to you, but HSA's kind of replaced FSAs in the tax industry. Yeah.
So with this, I don't per se have a large deductible or whatever the word was, but every time I have co-pays, every time I go to the doctor, I can still do this plan, right?
Oh yeah.
Yeah, that's fine.
Absolutely. If
It's
you
so
have
much
it-
easier now, though.
If you have an HSA set up.
Yeah, years
Yeah.
ago you had to do paperwork every single
Yeah.
time and fax it
Yeah.
over and get your reimbursement
Yeah.
then it's paid, so I stopped doing that.
You can go to your bank, you can go to your credit union, you can go to your insurance company, any one of the three can set one up for you. It literally takes about 20 minutes. Yeah. And you don't have to put 6,750, you can put in 1,000. Whatever you put into that account is totally tax deductible.
Which is why the idea of
And so you're now paying for that part of your medical expenses pre-tax. Where right now, unless your medical expenses exceed 10% of your income, none of them are deductible. Thanks, Chelsea. Okay, makes sense? Questions? I know I'm going fast, I'm sorry. Normally when I do these presentations, I do them for an hour. So we're covering in 20 minutes what we normally cover in an hour. Now, tax planning. Now that you have your own business, you need someone, a CPA or a tax preparer, that will plan with you. If you're going to H&R Block, if you're going to Liberty, Jackson Hewitt, if you're trying to do your own taxes, you're not going to get any of this. And now that you have your own business and you start making good money, the most important thing you can do is tax plan. I had a client come in about 2 weeks ago, and we send all of our business clients a letter in October that says, okay, it's October of 2015, come in before the end of the year and let's plan with you. Most do, some don't. Well, this guy didn't. And his business tripled in 2015. And so he came in February, brought all these, January, brought all these stuff in, and he owed a ton of tax. I think it was 45,000 of tax that he owed. And I'll tell you, he about passed out right, I thought I was gonna have to call paramedics. He about passed out. And he says, well, what can I do now? And I said, nothing. Well, what could I have done if I'd have come in? A lot. So you need somebody that will plan with you. You need somebody that will talk about Section 179 and talk about vehicles that you're driving, laptop, computer equipment, software, office furniture. You need somebody that will talk about what are you doing for retirement? Putting any money away because it's tax deductible. Health savings accounts. So all of these things now that you've never had to worry about, when you own your own business, guess what? You have to worry about it now. Question?
Are there any questions I should ask my trying to join CPA that would kind of give me an idea that they're good with direct sales? Because I'm sure
You must have read my mind.
Oh, yeah.
We're going to cover that in about 1 minute.
Okay.
Okay, if you're an S Corp, which is the one I said would save you the most money, you do have to do a reasonable salary, and this doesn't mean anything to you because I don't think there's any S Corps in here right now, but it's going to mean something. One, it's going to mean something once you start making some pretty good money. Again, 20 to 25,000. You need to seriously consider this. If you go to your CPA and say, listen, I'm making 25, 30,000 in my Posh business now. I think I need to become an S Corp, and he or she says, no, you don't. What do you do?
Get up and leave.
Find a new one. Okay? Okay. The great way to keep track of your vehicle expenses is using the mileage. So, lady in the last thing, there's an app called something, mileage Q or something like that on your phone. Mile Q. That will, you can keep track of your miles right on your phone, because it's 54 cents a mile that you drive for Posh this year. 54 cents a mile. Now, we get this question almost every day. Okay, Brad, well, what receipts do I have to keep? My answer is,
All of them.
if you're going to deduct it, you better keep it. Because if you don't and you get audited, what do they do with it? Throw it out. Let me give you an example. We have a stockbroker client, and he got audited a few years ago. He does a lot of traveling around the country, and he put all of his travel and meals on his credit card and didn't keep anything. And this auditor was kind of nasty. And he said, well, I want to see your all your travel-related documents. And Billy said, well, they're right here on my credit card. And the auditor said, well, that means nothing to me. I don't know if this is you or this is you and your family, or I don't know who it is. I want to see your actual document from the airlines. And he said, well, I didn't keep them. And he had spent like, I think 40 or 50,000 that year. Guess what the auditor did? You get to pay tax on that. So keep them. If you go to Sam's Club and buy something for your business, for $500, let's say, and you just put it on your credit card and don't keep the receipt, and you get audited, the auditor is going to say, what did you buy? I want to see that receipt. And you say, well, I bought stuff for my business. And they say, well, how do I know you didn't buy a lawnmower? It's important that you keep the receipt, okay? Okay, now,